Good morning. In this presentation, we are going to see how we can trade in MCX Copper for this week. Before looking into that, let us see what happened last week. And the chart which you are viewing is an 1 hour chart, which means that every single candlestick represents 1 hour. And also these two vertical dotted lines, you can see these two vertical dotted lines always indicates the price opening and closing for the respective days. And this black box indicates the price opening and closing, and this blue box indicates the high and low for that particular day. As a client and as a viewer, and also for the new viewers, we are saying that every Monday we will look at the weekly charts and we will go with the weekly predictions, and on weekdays we will follow short-term charts, candlestick chart, in order to go in line with our predictions and also our expectations. So let us see what happened last week. That is on 11th of this month. You can see this is the price opening. Copper market opened around 405. This is the zone where the market opened on Monday, and as you all know that it is a spiked up opening, which means that after the price opening the market spiked up heavily. So these are the untraded zones. We can say that it is a traded zone, but these zones it is very highly impossible for us to take an entry. So that we call as a spiked up price opening, that after the price opening you see the last trading price will be somewhere else. So on Monday the market opened around 405. This is a zone where the market opened on Monday, that is on 11th of this month. And what we expected right from Monday was that we were targeting a zone called 412. We were targeting a zone in and around the zone, and we expect that the market will have some consolidation, and this zone is going to be the major zone while for deciding the trend in copper. That is what our major expectation was. So we were, just because this zone is also a convergence of the moving average. You can see this moving average is also converging at this zone. So whenever the average is converging in a major zone, we can consider that zone as a very good trend deciding zone, sir. That means, what is meant by trend deciding is that because you can see that in all the price we cannot move and pick a point and it will have a great swing. A trend deciding zone is a zone from a particular point where the market will have a highest swing in the market, that is from 412. If we can see that if this 412 is going to be the trend deciding zone, from 412 the market will have a certain potential to move 10 points up or 10 points down. So from that particular zone the market will gain momentum. That is called a trend deciding zone. So as we all know that copper was dropping heavily, so you can see that from 430.7 the copper was dropping heavily for weeks. So at last we entered into this week, and what we expected on Monday is that this 412, just because on the previous week also you can see this 412 played a very crucial role in pushing the market down. So once we saw the same price on Monday, so what we decided is that this 412 is going to be the key zone in trading in copper, and we were targeting this zone. Initially we expected the market to go for selling, as we are a trend follower. Unless until we get a clear confirmation, we don't take any position against the trend. So as we always say, trend is our friend. So what we expected on Monday is that we expected, unless until we get a closing above 412, and if there is a very consistent price for a pattern formation above 412 and this 413.2, then we can go for a buying. Unless till that, it is market can be expected to be in the downtrend. That is what our expectation was on 11th of this month, that is on Monday. So let us see what happened after that. So after the price spiked up opening, you can see the market gained some selling potential around 412. You can see this 412, the market had some potential and it tried to push the market down. And once again we are saying every single candlestick represents 1 hour. So please make a note of that. Every week on Monday we follow weekly charts who have weekly predictions and expectations. So there was some selling happening around 412 that pushed the market down. but since it is a spiked up opening, you can see on the previous week there was some buying happening around this zone. So there was some buying happened around 410.2, and that really tried to push the market just above 412. The market created a low of around 413.8, 400, nearly 414. The market went to a high of nearly 414, but a failure to sustain above this zone pushed the market again down. You can see it was also supported by the averages. So it was trying to put something above the average, and a failure to sustain above the average and a failure to sustain above the key zones again pushed the market down. And again the market, you can see that it is this small candlestick, you can see that this market went up and tried to test it again, and it fell down and closed below 412. So this is again the key question. The market closing is always, whenever the price is trading in a very key decision zone, we should consider the closing as very important. So the closing is just below that, but there was a 50-50 chance that happened on Monday. Monday was had a very 50-50 probability where the market had some buying, but it couldn't sustain that. So the market fell down and closed around the zone. The next day, that is on Tuesday, you can see the market opened just below this price closing, and again it tried and went to hit this 113.2 where we marked on Monday. We marked this reference zone of 113.2, so that since we expected some resistance, we witnessed some resistance happening around the zone, not only on Monday, but also you can go back and see that on 6th of this month the market had found some resistance here. So that is another major reason we marked this 113.2, which can be the reference zone, because always whenever we are hitting on a zone or a support or resistance, it is not a particular point. When we are targeting 412, we cannot say the market will exactly stay around 412. So it will be plus or minus 1 point. So that is what happened on Tuesday. You can see that the Tuesday market tried from the opening, the market tried to put itself higher. So and it clearly took the resistance around 413.2. First time it went up and tested, and again it came down and took some support around 412 and tried to push it again. A failure to sustain again above 412 pushed the market down, and you can see the market reached a low of around 409.5 and closed lower, that is just below the previous day's price closing. So the 2-day lower price closing happened. The next day the market opened exactly just above that, and again we saw a spiked up opening. That means after the price opening the market just spiked up, and it stayed above 412. That is a very most important thing. The market stayed above 412, which gave us a clear that the half of the session, you can see the market created some high of around 400 above 414 point, that is 414, that was created on Monday. So the market was staying, you can see that 1 2 3 4 more than 5 6 candlestick, the market was staying above the 413.2, which we considered as a major resistance. Again this 413.2 now provided the support on Wednesday, but again a failure to sustain above this 413.2 again pushed the market down, and it created a new low. You can see that it created a low lower than the previous day low. You can notice that this low that created on Wednesday was lower than the previous day low, and the high that was created is higher than the previous day high. And when we go for the closing was a little bit lower. So that created an indication that the market is you can see the closing every day, the closing is decreasing, but on Wednesday the high is increased and the low is increased, and the market closed lower. So the market closed around 410. This is the zone where the market closed. So consistently what we witnessed till Wednesday was that we witnessed a lower closing, but always on every day we cannot neglect the fact that the market, copper market, was really trying hard for buying. Copper was trying hard to put itself above 412 and to find some closing above 412 so that it can put some buying momentum to push the market higher. But technically saying, lower closing doesn't allow the market to move higher. So what happened on Thursday, it can be a crucial thing. You can notice that the market opened just above that, and the market was finding some strong resistance around 412. Now the market is even struggling to break above 412, but till then the market was finding a very strong resistance. You can see this resistance happening around 412, that is really pushing the market down. But in the later session, you can see at the end of the session, the market was quite successful in breaking this 412, and the market showed some closing around above and in the middle of the zone of 412.6. So that is the first time the market that in the last week had showed a closing within this major zone of 412.6. So you can very well notice that this is the closing what happened on Thursday. So now it is very important that, because you can see that always this 412 played a crucial role on every day. The market tried everything to put itself above 412, and there was a consistent failures in that. But on Thursday, that you can notice that the market didn't came down and tested the previous day's low, and it could sustain this 410. You can notice that this was the low. You can see that that was created on Monday, that pushed the market higher, and again on Tuesday the market from this zone pushed that higher. So again on Thursday the market didn't even tested the previous day's low, and it closed above that. So that gives us a confirmation that it is going to be the 50-50 probability for price opening if there is anything. And also you can notice that there is a great thing happened, is that the crossover of the short term and the long term averages also happened. So that is another critical area where we should note that. So that happened because the market still on Thursday it was trying to stay down, but at the end of the session the market has clearly broken that, and average crossover has happened and closing above the 412. That is a major resistance, and that is what we expected. We expected some closing above that so that it can gain some buying momentum. Always that will create that will create a buying momentum, because given technical reasons, crossover, sustainable support below, and closing near the key zone. So that happened on Friday. So the market opened around 413. That was the highest opening that we had for the last week, and you can see the level of buying we had initially. So this is called a pressure, releasing its pressure. So the last week you can see it is a very, very strong consolidation, which we consider as a very good testing for our skills. So these are the areas where we can learn a lot how to go with trading, because as we always say, there are two parts where we will find it difficult for trading. One part is when the market is consolidating like this, where we need to use all our skills like pattern formation, support, resistance, averages, and opening high low close analysis. Whatever we have learned in technicals, we need to apply that, and we should make the market move, and we should go with the market above that. The next area part is that after the price clearing the zone and after reaching some 10 points above that, then the market again is going to consolidate. We should wait for that. So these are the two zones where we will really find it difficult for trading. So on Friday, this is the type of what we call as releasing its pressure. So after the opening, you can see suddenly the market went up and it released all its pressure. So after releasing its pressure, a strong consolidation happened, and the price closed near 416. But at the end of the session, we can say that the price closed just above near the high, that is around 417. The market closed that. On Saturday, you can see the market opened just above and closed around 418.2. So this is what we called a clearing and giving a confirmation for trend. Where we got a confirmation when the price closed, this is the zone where we got a confirmation. So above the zone we went for a buying. So this is the way to trade in commodities market when the market is consolidating a lot. Hope that copper has taught us a great lesson last week, how to go and trade in copper when it is consolidating and after a huge drop. The market has taught us a lot of things. After a huge drop, the market will consolidate, and when the market is consolidating, what are the things we should use and put lot of efforts to gain some buying momentum. So now we are with the buying momentum, and today we expect copper to open more or less above this 418.2. So that can be around 419 or even 420. So as far as our COMEX price direction, following the COMEX price direction, it says that the market is showing some buying above the previous week's closing. That means we can expect copper also to open higher. So above, since we are presenting this video much before the price opening of MCX and also the currency market MCX SX, so we can because nowadays commodity market is greatly influenced by INR prices also. So we need to monitor the Indian rupee value where the market is closing and opening. Based upon the price opening, we need to make some few adjustments. As far as COMEX purely is concerned and copper market is concerned, we expect the price to open above 419, which means that this week also we can expect the market to move higher and stay in the buy trend, having major supports like 416, 413.2 and till 412 we can go for a buying, and the expected target zones are 422 and 425 to 426. Now you can see that there is something we have marked around 425 to 426. Now the another important thing is that we should go back and see what is this 422 and the importance of 25 and 26. Let us go back and see and follow this line. So before that was a great last week, few weeks before there was a bomb, like a downside bomb. That means that from 431 the market dropped drastically. But when we trace the path where the market has dropped, we can say that you can just monitor this 422. This line acted as a major support that prevented the drop. So you can see on 25th of 25th you can see the market just provided some support and prevented this drop and pushed the market higher. So like that you can see many times this 422 has been the savior for the market's drop. So and also the other major important thing is that 425 to 426. So like how we targeted 412 last week, we were targeting this 425 and 426 when the price was dropping. So this is going to be a very key zone. So copper should clear so these great barriers. Now since it acted as a very good support that prevented the market from dropping, but after only the market dropped below 422 and 426, the market went for a huge and very huge selling that happened a few weeks before. So that is a major reason why we are providing you a hint that this should act as a major resistance. 422, 425 and 426. If you want to know the in-depth detail what does this means is that you can, whenever we are placing the cursor here, you can see the date below. So go back to our website www.onlinecommoditytradingmcx.com, where we have the archives of all the videos we have presented. So go back and see what does this means, because we have mentioned clearly the importance of 425 and 426. That is the reason again we are pointing it down. Now we are expecting the copper to move higher, but these are going to be the major barriers and resistance for copper market. We cannot take this very easily. So the expected zones, as you all know, we have marked it, and go back and see the importance of this zone. These zones are very important. Just because the price has swinging from 412, after reaching 422 it can release some pressure. So all we need to do is that follow some trend deciding patterns. So what we expect for copper today and for this week is that it can possibly stay in uptrend, having all these supports. So let us see what's going to happen during our trading sessions for this week. As you all know, as a client and a viewer and a follower, this is going to be the beginning of this week, Monday, and Monday is always a very crucial day for us, because if we can position ourselves in a very comfortable zone on Mondays, then the coming days are going to be easy. So we wish you all the best for this week. Happy trading, and thanks a lot for all your support and watching our videos. Take care. Bye.